Welcome to Market Movers. I'm Dave Hightower, joined by Dan Bossie. So Dan, a lot of outside market influence is going to collide with the internals. We have tariffs going up, we have threats of currency wars, we have threats against demand, and now we're going to go out and we're going to look at the USDA supply numbers. And are they going to exaggerate it, or are they going to cushion prices?
I wish I knew, David, but the USDA report will add another element of uncertainty. They're going to be trying to update us in terms of seeded acreage for corn and soybeans with prevent plant acres included. They're going back and resurveying those same acres that was uncertain in June. The expectation is we'll find another 4 to 5 million acres that'll hit up in the prevent plant. That being said, we're also using satellite data to give us the final yield or the yield for the August report. So when we stand back from this, David, we may know less than we started with.
Well, we started out and we were estimating some big losses of actual acres. Then all of a sudden the weather turned off great, and so the acres that we do have are thought to be yielding more, and now we even have the heating degree days catching up.
Well, we do, but we also have this acute dryness that centers from Illinois, Indiana, and Ohio. I know, at least for myself, I was at about 167 corn yield. I'm now parsing that back. I'm concerned about what's coming forward here, but this is what makes the market in terms of differing opinions. And when you try to think about satellite data and where this crop is maturity, I really don't know how NASS will come up with a yield estimate all of us can trust.
And that percentage of normal precip out in the next 5-6 days, that could turn into something bigger if we don't get some of those rains.
Oh, we need rain immediately across Illinois, Indiana, Ohio, and eastern Iowa. If we don't get that rain within the next 3 to 5 days, we can take estimates on yields for corn and beans down a little more.
So soybeans, though, maybe not so much change this time.
Well, the soybeans, the difficult aspect of soybeans is there's nothing to count. We have nodes on a small plant. We can try to look at that. There are some good areas of soybeans in Nebraska, all the way arcing into Minnesota and Wisconsin. But again, that's not the heart of the soybean area. So again, we've got an immature crop that doesn't have node placement that'll give us comfort, but we're using satellite data for this report. And so no one has any real, of course, understanding of satellite data and farm surveys. The farmers will come back, I'm pretty certain, they'll say their crop is not what they're hoping for and they like it less each day. That's something we'll decide on as we go forward.
Weather volatility and data. So, Dan, before we dive into our trade discussions, I'd like to point out that these trades are examples and not recommendations or advice. So, Dan, what's your look?
Well, David, I like buying a October 430 corn call at 10 cents. I'm going to risk a nickel and with a target of 25 cents. The reason I'm buying October is it gets me not only to this report that's coming up on Monday, but I get that all-important September report also. I think September may be more important than August in terms of yield analysis when we go down the road.
And just the right amount of time. So, Dan, as an example, I want to look at two different ideas. The first would be a longer-term outlook. I'm looking to buy 1 July 2020 corn futures, sell 1 December 2020 corn future on a spread, looking at about 14-15 cents. I want to risk 6 cents on the spread. I want to use an objective 50. It could be 60 or 70 depending on what kind of acreage we come down with. And for a shorter duration, I'm looking to buy a November soybean 840 put, 14 or 15 cents. And then I want to pay for that by selling a December corn 390 put for approximately 14-15 cents. I want to have that net objective of about 21 cents on the trade. And again, I'm trying to use the tightest fundamental market by selling the put, and if there is a good weather shake, if there's negative data, then the long soybean put will probably be the most volatile.
Dave, I like the trades. In particular, I like that corn spread. I think old new crop corn spread should perform. Next year, we could be looking at record U.S. corn seedings if we don't get a trade deal with China.
Great. Maybe record volatility. So, Dan, on Market Movers, we like to educate new folks just tuning in, and our education topic this time is heating degree days and pollination.
Well, we're in the throes of pollination right now. Of course, it's happening about 4 weeks later than we normally would see that because of seeding dates. After pollination, it takes about 72 days to get the black layer. So this is where degree growing days comes in. Will we have enough time to really get this crop to the end in terms of, the corn being mature? Many farmers can always use, of course, propane, and maybe we need to talk about being along the propane market after all of this, but the farmer's got a dilemma here in terms of can it get his crop home, and of course, pollination and everything is happening at a very late date right now.
First bona fide frost threat in years. Thanks, Dan, for your insight. We'll keep a close eye on the market. Thanks for joining us on Market Movers. I'm Dave Hightower. Trade well and trade smart.